And as the economies of East Africa grow and prosper, the role of banking becomes more prominent each day. We believe that by strengthening economic links between Africa and Europe, both continents stand to win. For the EU, boosting jobs and growth, not only in Africa but also in Europe, is crucial for our relationship with the African continent. A long-term but very clear path where the EU stands at Africa's side to develop this partnership and in partnership for jobs and growth. The financial sector is key also to attain the sustainable development goals. We should not forget about them, even though they have taken a big beating due to COVID and now global recession. We also have to keep in mind the climate agenda, which more and more it becomes clear to everybody that this affects GDPs around the world. In addition to development cooperation assistance, the EU is engaging to strengthen and improve financial markets in East Africa and their role for sustainable development, stability, and prosperity. We have just seen in the latest news for Kenya that whilst growth has been stable around 5%, the effect on equalizing the society has not been good. So since 2015, there has been a redistribution from poor to rich. So the growth has not benefited the poorer segments of Kenya. And we also know that in order to reach upper middle income status, a country needs to address inequalities. So I'm just mentioning this example because we are in Kenya, and maybe Kenya is not unique in this development. This is something that we have to address at the macro level. But in any case, since this is the context where we operate, we have to keep it in mind. So we know that banks and other financial actors are dependent on a stable economic growth. And for us, stable means also sustainable. Sustainable in the long run. And sustainable in the long run also means political sustainability. We know that banks and other financial actors are drivers for wealth creation and draw long-term benefits from engaging as responsible partners in society. Banks are also powerful actors to define where development and investment is going. Access to finance is essential for big and small companies alike. It is in the hands of banks, therefore, to decide who and for what purpose financing is made available. And modern banks nowadays are guided by principles of corporate social responsibility, gender equality, sustainable and green investments, and we are very grateful for that trend. The EU works on many different levels to develop financial markets in Eastern Africa, but our driving principle is that we want to create jobs, growth, and prosperity in a sustainable way. Concrete examples in Kenya are the European Investment Bank and the European Union delegations blending operations to provide lines of credit to Kenyan banks, which then offer in return the needed capital to SMEs in various relevant sectors. On the one side, as already mentioned as it was mentioned yesterday, the EIB and the EU in partnership facilitated to Equity Bank a 50 million euro line of credit to provide loans at appropriate conditions to agri-businesses, which include in their business models the integration of smallholder farmers in their value chains. This has become of great importance also given the priorities of the new government here in Kenya. On the other side, as part of the Kenya Team Europe COVID response access to finance, a 50 million euro line of credit blended with an EU grant was signed at the end of 2021 with the Co-op Bank of Kenya, the largest cooperative bank in Africa, to on-lend to private sector entities, especially SMEs. Trade and investments, as I said already before, are key components of the EU's offer in Africa. And we frame this through the so-called Global Gateway, which is the EU's channel to boost smart, clean, and secure links in digital, energy, and transport sectors, and to strengthen health, education, and research systems across the world. In Kenya alone, the EU's private sector companies were responsible for more than 1 billion euros of direct investment. And the production of goods exported to the EU sustains more than 500,000 direct jobs in Kenya alone. This is a word. The European Union is the largest destination for Kenyan exports with a value of 1.3 billion euro in 2021. And the sky's the limit. We should not rest on where we stand now, and the merits of today are the opportunities of tomorrow. The EU External Investment Plan supports Africa to create a virtuous circle that accelerates economic development and provides the needed financial resources to implement Global Gateway projects. The 14 billion euros European Fund for Sustainable Development, abbreviated as EFSD, is the financial arm of the EU External Investment Plan. Through this EFSD, we provide financing for development projects and programs in the form of guarantees and blending. These are implemented by a number of development finance institutions, such as the French AFD, the German KfW, or the Dutch FMO, but also by the World Bank and the African Development Bank. These institutions then establish partnerships with actors in Africa. The European Investment Bank is an integral part of the EU's External Investment Plan. In addition, the EU and its member states have vast cooperation to deepen financial markets, including support to policy making and the drafting of regulations, accountability, transparency, and the improvement of the general business environment. Part of this is also the fight against corruption. I want to mention this. This is not an easy subject, but ignoring it will not get us very far. In the future, many new avenues will be opening up. This November, the global green bonds market has hit new heights with news that two trillion worth have been issued since the first one came out 15 years ago. That is a number that should be savored. While the EU is the world's largest market, the EU is setting up also a global green bond initiative with a view to support issuances in emerging economies. This could be one of the main instruments to help developing countries mitigate climate change. And we see already very encouraging examples in various contexts, including here in Kenya. The acceleration of the digitalization of financial sectors and public administration is a necessary precondition to create added value for citizens and businesses across Africa. Strong measures to ensure security, resilience, and deterrence against cybercrime, including international cooperation within established legal frameworks, is therefore a priority, together with our African partners. I'm very grateful to the Trade and Development Bank and to the European Investment Bank for the opportunity to highlight and accelerate these priorities. I wish you very fruitful discussions ahead today, and thank you for listening to me. Have a good day.
Thank you very much, Ambassador Geiger, for those opening remarks for today. As you mentioned, the Africa-EU partnership cuts across political dialogue through to very concrete action that supports sustainable development. I picked up that you highlighted the tangible investments that the EU is making through Team Europe, which is a collaborative effort of various arms of the EU and actors in the EU across our region to do things that support domestic banks and financial institutions so they can do more in sectors that create jobs and drive growth. I also noted the Global Green Bond Initiative, which is something quite timely, I must say, that could help actors in emerging economies access capital to drive climate-smart and sustainable development. We appreciate and value this strong development partnership between the EU, its various arms such as the EIB and the East Africa region, and long may it continue.